It's Bartholomew Perez with
Juanita G.
And this credit question. So we have clients.
Credit, right?
Credit all the time. It never ends.
U.S.
And it's part of the process, which is why we talk about credit,
Yes.
where we will have a file ready to go. And then sometimes that time lapses. But how long is a credit check good for?
Good question. I mean, don't run my credit. I'll give you my information, but please don't run my credit. Can you give me all the information, but just don't run my credit? I mean, unfortunately, we have to run the credit. And
Right.
yes, the credit is good for 90 days. The reason why is because there's a statute of limitations on everything, right? Just because you're employed right now,
That's right.
and you can pay your bills right now, it doesn't mean that, something can't change 90 days
Layoffs happen.
from now. Companies close.
Injuries.
Exactly. Divorces.
Sure.
Family tragedies.
Yeah.
And that is the main reason why the credit has an expiration date, folks.
So this is a hedge against risk for the financing side.
Absolutely. Absolutely. You put yourself in your shoes. You're lending somebody hundreds of thousands of dollars.
Probably do the same.
Exactly. Yes. Very standard. So the credit is good for 90 days.
Okay, 90 days.
Now, we have two types of borrowers. Conservative borrowers, right? That, rarely use credit,
Yep.
are constantly savings. That's just the way that, they live. And then we have the other end of the spectrum, right? The client that loves to live on the edge, loves to use credit, revolving credit all the time. Ratios are a little higher,
And this is debt to income ratios.
Yes,
Okay.
debt to income ratios. So if you call me and say, Juanita, we're going to put an offer, the credit is expired, we're going to have to update it.
Yeah.
We're going to have to rerun it. Why? Because if we're dealing, with the client that is constantly using credit, we need to make sure that it's not going to change their pre-approval numbers.
Right.
Because if you're looking at a house for $700 and we're maxed out, and let's just say, there's an slight increase in rates, well, between the both combinations of maybe additional debt and, the interest, they might now only qualify for $720. That's the reason.
Okay.
Yeah. So the expiration date is 90 days on the credit report. And again, every scenario is different.
Absolutely.
We don't want to run credit if we don't have to.
Right.
So we will definitely work with the borrower, just to try to avoid it if we don't have to.
Right.
But yep, 90 days.
90 days. There you go. That's the answer here. Bartholomew Perez with
Juanita G.
and here to inform you on real estate. To be continued.
See you next time.